Get started. We're going to start with announcements first. Um, if you are able to and are interested in participating on the street taco cook-off, again, that's going to be April the 19th, which is a Sunday, from 10:30 to I think 1:30 was the time frame. Yes.
Hey, raise the board.
Oh yeah, so sorry. I didn't see that there. On it. Um, yeah,
Tangible.
Um, so if you are interested and want to participate, feel free to fill out the form that's there in the announcement in Canvas. Remember, you get to get your team of 3 together. It's free to attend, and it's just a fun little way to compete. You don't necessarily have to be culinary. You can be pastry, hotel, hospitality, restaurant. Doesn't really matter. Any of the degrees. Um, so other announcements. Um, we have the Performance Food Group. That's a food show that's going to happen on Tuesday, April the 14th. So that is going to be something that if you're wanting to go to that, you can sign up in class. I will get a digital copy of this registration form uploaded today. So if you haven't registered and you want to, you can register online through that digital one. Other announcement, and this is just because I just heard Amaya talking about practicum. Okay. We do have practicum courses that are available in the summertime. Okay. If you don't know what practicum is, it is the class that you take. It's what we refer to basically as an internship class. And so it's a class that you take where you take all the things that you've learned about here at St. Philip's and you apply it to an on-the-job scenario on the situation. So like in baking and pastry arts, really it's helpful if you've taken most of your pastry classes because then you'll know whether you want to work in a cake decorating shop, cookies, or if you want to work in breads and rolls, a bakery, pies, and that kind of stuff. So gives you an idea of where you want to do your practicum. For culinary, your practicum can be done right basically in any kitchen. So we have students that have done it with the convention center that does like all the meals for the large conventions in town, hotels, restaurants, food trucks, schools, even daycare centers. So we have I've even had students have done their culinary practicum in a hospital before. So kind of just depends on you where your interests lie with that. Restaurant management majors typically is the front of the house. Hotel majors, you're going to be right there in the front of the house of the hotel, many different departments. And hospitality are the most broad. You can basically do your practicum at any site that's related to hospitality. So we will have a meeting on April the 29th. It is a Wednesday night Wednesday afternoon, 4 o'clock to 6 o'clock. Okay. It is required for you to attend that meeting. If you're going to the summer practicum, it is required for you to attend that meeting on Wednesday, April the 29th. If you were thinking you're going to do your practicum in the fall, does anybody in here think they might do their practicum in the fall? Yes, no? If not, that's okay. But if you think you might do it in the fall, you can also attend that meeting on the Wednesday, the 29th. Because then that way you don't have to come back during the summertime to attend the summer meeting. But basically at that meeting, we're gonna have a job fair and we're gonna have information session about the practicum. Any questions, comments, concerns about practicum?
Is that like Canvas course gonna be available soon?
For summer, it should be published already, unless you're pastry. If you're pastry, let me look to see if they added me because Yes, they did. So I'll get that posted today. I have it for the other ones. They didn't add me to pastry until last week on Friday. So I'll get that posted today. All right. Any other questions? Oh, if you will give me one. So today we're going to finish up our textbook, the 10th chapter of controlling our food service costs in our food service operations. And today we're talking about money. Okay. A lot of the things we talked about as far as in the past few chapters, we've talked about reports that show how much money we should have, reports on how much product we should have in house compared to what we physically do, and then what that variance or that difference is, and how we're going to try to figure out why we have a difference or a variance. Um, but this chapter, chapter 10, talks about money as in like the physical money that we have collected, and what we need to do with that to maintain the security of that money. Okay. So we have a four-step process exhibited, demonstrated right here by exhibit 10.4. Okay. So we first want to verify all the product sales. We've done that. We've talked about that in chapter 8, I believe. We talked about what the kitchen issued, all the food that went out of the kitchen, and then we verified that against what the guest checks were, what the servers actually turn in for those guest checks. Okay, how does that help protect our revenue, the money that we should be bringing in? What the issue, what the kitchen sent out versus what the guest checks, what was on the guest checks.
Sure it's the same.
Make sure it's the same thing.
There's no variance.
Yeah, there's no difference in what was actually sent out, that there was a ticket for each thing that went out. And that it was the same thing. So let's say, I don't know, give me an example of something that might go out different from what the check might say.
A last second modification that the server forgot to put in.
There we go. Okay, so maybe the server forgot that it was supposed to have been chicken fettuccine alfredo, but they just ring in the fettuccine alfredo. So they just go into the chef and say, "Hey, can you add chicken to that for me? I forgot to put it on there." Well, if the ticket says fettuccine alfredo, and that's what the guests are charged for, that's the money that's coming in. But if we send out a fettuccine alfredo, and that's more cost and ingredients, that's product that's missing as far as the perpetual inventory, and it differs from the check. Okay. The next step is verifying the guest charges. So we want to look at the reports to make sure that everybody was charged appropriately. What is an issue? Well, first of all, what is undercharging?
Undercharging is like charging somebody for a fettuccine alfredo when they got a chicken.
Okay, so maybe charging them less than the product that they actually received. So the example we just talked about, if we undercharged them and gave them a chicken fettuccine alfredo with chicken, but we only charged them for just the pasta, then they're going to have an issue. Our records are going to be off. But what is a general issue with undercharging a guest? Say that again.
Free drinks.
Okay, so if we're giving them free drinks, right? So if I come in and Amaya gives them free drinks and I don't, if I charge them the right amount, what does that do for their perception?
They think you're mean.
They think I'm mean. Okay, yeah, we can leave it at that. Good. They might think I'm mean. They also might think that I'm trying to overcharge them. And that's gonna leave a bad taste in their mouth. So if we are undercharging the guests, then we're not bringing as much revenue in that we should, but yet the perception for them is that this is how much it costs me to go out to eat to this place. And then if I come back and the next time I get a server who charges me for everything, then they're going to have some issues with that. Okay. Sometimes it's as simple as like when I was at Chester's Hamburgers, our onion rings are more expensive than the French fries. So if somebody orders onion rings, and because I'm in a hurry as a cashier, I just hit French fries, I'm undercharging them for the French fries. And so when they come back the next time and somebody charges them the correct amount, they're going to think that that person is not that person's trying to charge them too much because the last time they were there, it was a certain amount. So undercharging the guest is really an issue from a revenue perspective because we're not bringing in the amount of money we should, but then also from an inventory perspective, that our inventory is going to be off. And lastly, from that perspective of the guests and what they expect to happen the next time they come in. So the opposite is overcharging. What are some issues with overcharging our guests?
They feel like they're being scammed.
Yeah. How many of y'all follow the San Antonio restaurant Facebook group? Anybody? If you don't, and you really want some comical relief and get stuck in some doom scrolling on the comments, I highly recommend it. We have a lot of self-proclaimed foodies in the city of San Antonio that know exactly how service should be, um, how what they should pay for everything,
I roll,
and a lot of eye rolling. But they do, there's always at least one post every week that someone feels like they're getting scammed, whether they're now being charged a credit card processing fee, which is now allowable. It used to not be, it is now. So they think that they're getting scammed because they're having to pay an extra 2 to 3, 4 to 4%.
Some restaurants charge the waiter for the credit card process.
They charge the waiter.
Which is brutal. Yeah,
That's
I had that happen to me at Maverick Brasserie.
okay.
They had this super corrupt tip pool. But yeah, like the credit card processing came out of my pocket.
So if someone paid a credit card tip, then you would be deducted that processing fee for that tip. Wow.
Plus all the tip shit and everything.
Yeah.
It was they when I left there, it was right after Barbaro got in trouble for tip or like wage theft. And when I left Maverick, I threatened to go to the press with them, and like not even a month later, they got rid of their tip pool.
Yeah, so that's that tip. We can spend a whole class on tip pooling and whether it should happen or not the way it should happen.
Sharing with kitchens now to
Um,
make up for not paying.
yeah,
And-
yeah. But when we overcharge our guests, what are some other implications or things that could happen if we overcharge guests?
That, because they think it's too expensive.
Okay, yeah, they may think it's too expensive. Remember that price value relationship we talk about in chapter 4. If that price is too high, doesn't match their value, they're probably not going to come back. Okay. I'm going to give you an example of a time that I was overcharged. And this is going to seem really silly and stupid, but this was in 2019. So this is 7 years ago. Okay. I was in the Denton area north of Dallas. I went up to visit North Texas. And I went to this restaurant, this fast food restaurant, and the meal that I ordered was $9.99. And when she told me my balance, I was really kind of surprised because it was more than I thought it was going to be. I thought, man, that's a lot of tax. Um, and uh, and so I didn't really pay attention. But then when I got my receipt and I was waiting for my food, I looked on my receipt and she had upcharged me for a large drink. So she charged me 25 cents for a large drink.
Did you
Okay.
ask for a large drink?
She didn't ask me if I wanted to upsize. She didn't. I didn't ask if she would do that. She just automatically went in and added 25 cents to my check. Well, then as I'm waiting for my food, I'm looking around, and what do I notice? Every single person in the dining room has a large drink. And so I thought, well, that's interesting. So the line died down, and I went up to and I asked her, I was like, do you guys make it, do you guys have a policy of charging guests for things that they don't ask for? And she looked really confused. and said, I told her, I said, you didn't ask me if I wanted a large drink, but you charged me 25 cents. And her response to me was, do you want your money back? And I said, sure. So she opened her drawer, gave me a quarter. Now, technically, she owed me 26 cents, but we're not going to go there, the extra penny. Okay. But in the last 7 years, I have never been back to that chain restaurant ever again. Over 25 cents. So we never know. Now, that is maybe a little dramatic, a little excessive, but you never know what's going to cause your guests to not come back to your restaurant.
What chain was it?
I'm not going to say what chain it
Oh my
was.
Oh, come
I'm not going
on.
to say what chain
I
it
used to
was.
live in Denton.
No, I'm not going to say what chain it was.
If you ever go back
It
up
was a
there,
fast food chain.
if you
okay.
ever go back up there, you need to try Thai Square.
Thai
It's
Square. Okay.
wonderful people, wonderful
Yeah.
food, best job I ever had on it.
Okay. Awesome. I'll try that one next time I'm up in that area. But we never know when we overcharge our guests what the implications that could be. Okay. We want to verify all of our payments. Okay, that's the third step in protecting our inventory or protecting our revenue. We want to verify all the payments. So if someone's paying by credit card or debit card, we want to make sure everything is signed. We also want to make sure that if they are adding a tip, that tip and the total, the tip and the subtotal add up to that grand total. Can't tell you how many times when I was a server, if I went in and I put the grand total the person wrote and it was off and the tip was less than, I couldn't go back and change it. I just had to accept whatever the total that person wrote on their credit card slip. So we want to make sure we're verifying all of that stuff
So
is
you go
accurate.
by, you go by the total, not the tip line?
Correct, because usually what happens, and I don't know, maybe this has changed since I was a server, but typically what will happen when I close out a check, I put the total that the guest has written down, and then it automatically fills in the tip line for me based on the total that's entered. And so by doing that, if that tip line is less than, let's say the customer did their math wrong, you've got to go by the total. You can't
What if
change
it's
that
more
total.
than? What if they? Like,
Well, if it's more than what they wrote, well, then you just go by the total. Regardless, you go by the total.
so you take all right,
Yeah,
gotcha.
because the total is what they have written down at the bottom. Absolutely, yes.
Because coupons are up on the board,
Yeah.
does that hurt like revenue at all?
Does coupons hurt revenue? What do you guys think?
It
Depends.
Depends,
yeah,
okay?
It's like you don't get the money that you're spending because they have a coupon to pay less for it.
Okay. So
Theoretically, it brings in more people who end up buying more stuff that so that makes up for the amount that you give away.
yeah, so there might be like a promotion where if you order 2 adult entrees, a kid eats for free. Technically, the cost of that kid's meal should be built into the cost of those 2 adult entrees. Or let me give you a perfect example. I'm a huge sucker for this. If I open my Whataburger app and it tells me if I purchase a large drink and a fry, I get a free Whataburger. Okay. So I'm purchasing the fry and the drink, which we now know very minimal cost, a lot of profit margin. Okay, so the fries and drinks, I'm paying full price for those. I'm getting a free Whataburger. Okay, but unless you're like somebody who just likes a plain Whataburger, I like to add cheese and bacon to mine. So now I'm paying for the cheese and the bacon. And
Some
so
jalapenos.
I'm not really saving much, but it's sometimes those coupons are used for a way to get people in the door and then they start spending that extra money.
Yeah.
Yeah.
Or they buy more because it's cheaper, so you buy twice as much,
Exactly. Yeah.
Happens to me at HEB all the time.
And so exactly those coupons typically they do represent money, right? They represent a portion of revenue. There's a dollar amount associated with that coupon. So that's why we have to collect those. So if I have a server claimed let's say 2 adults, you get one kid free entree. If I have a check that shows that kid's entree was comped, I need a coupon to go with that check to verify why I comped that kid's meal. Okay. And so those coupons can also help us with marketing. So maybe we have a brand new item that people don't really know that we offer at our restaurant. And so maybe we just want to get people in. How many of y'all receive those like those coupon books in the mail? Like those big flyers that are like pages and they have like
Long
different
time,
coupons. I feel like they're getting less and less. They're going more to digital, but those typically, when you take those in, or if you buy those like entertainment booklets that have all the coupons for all the different things, um, typically what happens is when you scan that, it registers where you're coming from. And so a lot of times they'll see, okay, a lot of people in this area are redeeming these coupons and we don't have a store in that area. So that we might actually use that as evidence or justification to open a store in that area because a lot of people are using coupons or visiting from that specific area. So yeah, coupons, if it's done right, it can actually help you increase your revenue. And then also it allows you to bring people in that maybe didn't know about you. Any questions about verifying the payment? When it comes to cash control, we want to make sure when we're talking about protecting our revenue, we want to know who is responsible for controlling the cash. If there's a cash register, then usually it's only one person that is allowed to access that to manage the control. As a server, TGI Fridays and Cheesecake Factory, I was responsible for making my own change for my guests. I had to have my own bank on me at all times. When I worked at the Sheraton Gunther Hotel, we had one cashier. So if a guest paid with cash, I would actually go to that cashier to get the cash from them to give the change to the customer.
Take forever.
Depends on who the cashier is. But yeah, so that cash control is really important. And then our deposits, okay? Our cash deposits and our credit card deposits. So our credit cards, as we are waiting for that money in our accounting, that goes to our accounts receivable. Okay, I misspelled that. Not accounts receivable. That is money that's owed to us. So when we settle that credit card payment at the end of the night with the credit card company, then it goes into our system as accounts receivable. That's money that we should be getting back from the credit card company. Okay. What is the opposite of accounts receivable? Accounts. Anybody know?
Non-fungible,
What's that?
non-fungible.
Not non-fungible. Good guess. Starts with a P.
Post. The parts with the P? Payable.
There we go. Payable. Accounts payable.
Payable.
Those are all of our bills. So if like Cisco sends us an invoice for all the food that we just purchased, that invoice goes into our accounts payable. So that way our accounting team can make sure this is all the money that should be coming to us, the accounts receivable, and then accounts payable is all the money that we got to spend out to pay our bills. Okay. And we want to verify our cash deposits. When I was at Cheesecake Factory and TGI Fridays, TGI Fridays we actually did check out with my boss. So I had my server report. There was a big long, like a CVS style receipt. Okay, a big long receipt had all my information, and I had to give them my cash plus all of my checks from the credit card slips that were signed. I had to verify all of that.
Have them in order.
Exactly, and give all that and kind of check out with that person, and they would verify that everything is
Staple it.
correct. Exactly, staple it all together. Okay, and then the manager would take all those deposits from the bartenders, all the servers, and they would create that cash deposit for the shift for the overall shift. Okay. Cheesecake Factory, there were so many servers, and the shift turnover at shift changeover time was so hectic and chaotic that we didn't get to check out with a manager. We basically just took all the same information with our cash, rolled it up and put it into like a little tube, and we dropped it into like a little mailbox type thing. And that was all of our stuff. And we had to have exactly whatever it said we owed in cash. That's what we put in there, and we dropped it into the deposit. And then at one point, the managers would throughout the shift would go in and take everything out and do the deposit form for that.
Did you have to claim like all your sales and everything?
You mean as far as my tips when I clocked out?
Um, like, yeah.
Yeah. So my standard was 10% of my sales
Okay, so
or my credit card slips, whichever one was higher.
so
That's what I
you
would.
were allowed to do the 10%.
Yeah, we had to claim our own. We had to claim our own tips as we clocked out.
And 10% was the minimum. Yeah, that's ideal. Some places
Yeah.
make you claim everything.
Well, I mean, yes and no. Was it ethical that I only claimed 10? I probably should pause this, but is it this was back in 2000, so whatever.
I
If
mean,
it-
I had one of my I worked at Doe,
right.
and as server, and they downtown, and they only required you to do 10%.
Yeah.
And I
Because-
typically making 30-40%.
Right. The general rule of thumb is the average tip, the minimum tip is usually 10%, right? So that's always the justification of using 10% of your sales or your credit cards. Because if your credit card tips were higher than 10% of your sales, obviously you had to claim at least that amount because that's written on credit cards. That's justifiable. So, but we've got to make sure we're verifying all those deposits. Now, it was really nice because when I worked at Sheraton Gunther Hotel, there was one cashier, and so I would just take my receipt to them. They would actually pay out my credit card cash tips right then and there if they had the money. If they didn't, then they would put all that information, and then I have to go back to the hotel the next day, and I'd go to the accounting office, and they give me an envelope with my tips.
Used to do
So-
that. Now they're paying tips on paychecks.
Yeah, so that's a good point that you bring up as far as paying out on paychecks. There's a couple of different reasons for that. One, it prevents people from being surprised of their tax liability when it comes time to file their taxes. Because if you're not careful, I remember when I was working at Cheesecake Factory, oftentimes I would get a void paycheck.
Yeah.
Because the taxes that I owed were more than my hourly rate times the 213 times the number of hours I worked, right? And so I would get a void paycheck, which means I still owed taxes based on that information. And so when it came time to file taxes, I'd spent all my cash because I just had cash in my pocket. So
You have to
sometimes absolutely. So sometimes it is helpful to help kind of manage that. There's pros and cons to both. So
Yeah, all
as
the
a
taxes
restaurant,
come out of it.
as a restaurant owner, you get to decide what. I mean, your taxes are going to come out of it regardless. Because if I clock out and I claim that I got $50 in tips, then my taxes are going to come out at $50 in tips. So that's why you would get a void paycheck, because your taxes on that $50 with the tips plus it was more than the $2.13 an hour times 10 hours. And so
So
that's why you're paying the taxes on it regardless, one way or another. It's helpful to kind of help manage that, especially if you have a relatively young workforce and they don't quite understand the concept of paying taxes. It helps them out because when it gets to it, time to file for your taxes, your tax liability isn't usually as high, or you might get a refund because you've overpaid. So
I just miss being able to get off of work and leave with a pocket full of cash.
it is very nice to leave work with a pocket full of cash. That is true. All right, last thing is doing audits. What is an audit?
Whether it's somebody goes through all your financial stuff and makes sure that it's lining up.
Yeah. So an audit essentially is that kind of checks and balances. And so in the restaurant world, if we have a cashier type situation, well, what we might actually do is we might just put everything all in that cash register drawer, turn it in, and then someone from the accounting office is actually going to go ahead and do that audit for the cashier's drawer, just to make sure that everything is matching up and lining up the way it needs to. And then we have this concept of petty cash. What is who has, first of all, by show of hands, raise of hands, who has heard of petty cash? Who's heard of the term petty cash? Anybody online?
Oh, they're not there. Should make
Who has
another
not
campaign.
heard of petty cash? Okay. Ken, can you explain petty cash for us?
As far as I understand, it's just
Okay, yeah.
insignificant sums of cash. It's subjective to the person depending on their opulence or lack thereof.
Yeah, absolutely. So petty cash is
Word opulence.
typically a very minimal amount. Okay, it's for emergency purposes from a business perspective. Okay, so petty cash is usually anywhere from $100 to $200 max. And it really kind of just depends on the, like you said, the opulence or the level of service or the types of ingredients that you might be going out to get. So oftentimes this petty cash is used for emergency situations. Okay, so let's say what kind of restaurant do we own?
Sushi.
Sushi. Okay, I own a sushi restaurant and I'm out of wasabi. Okay. I have no more wasabi. So I'm going to say, hey, Belle, can you run to HEB? Can you go and get however much wasabi? I'm going to give you $30. Can you get however much wasabi that you can get with $30? Okay. So I go to the petty cash, I get out $30 cash, I hand it to Belle. She goes to HEB. Okay. Now when she comes back, she's going to have a receipt. Okay. Plus the change. And this should equal up to $30. So let's say she actually only spent $22 and she had $8 in change. That is equal up to my $30. This receipt is as good as money. It's as good as cash. It's the documentation as to why we spent that $22. And not only that, but what I spent that $22 on. So it should, if her directions were to go and get wasabi, well then there should only be wasabi on that receipt. Okay. Then at the end of the night, the cashier or the manager, they're gonna go ahead and take that petty cash, they're gonna put it into their reporting. They'll get $22 out and refund it and refill that petty cash back to the balance it should be. But in a sense, petty cash is really just an emergency basis. It's just there in case we run out of something, we gotta run and do it. We gotta go pick something up between deliveries, that kind of a thing. Questions, comments, concerns about protecting our revenue, our money? I had an example where a chef who owned a restaurant had a buyout. Okay, who does not know what I mean when I say a buyout? Okay, so a buyout, let's say, kind of if you want to, what's your favorite restaurant in San Antonio?
Necessarily believe in favorites.
Pick one.
Dios Tepis.
What's that?
Dios Tepis.
Giuseppe's? Okay, so let's say you want to have your graduation party there and you don't want anybody else to be in the dining room. You want to just be you and your guests. Okay, you're going to do a buyout. Okay, so a buyout is any kind of situation where you don't want anybody else to be there. It's just going to be you and your guest. Okay. When I worked for when I worked and did event planning, I would have clients that wanted to do like a buyout of Hard Rock Cafe. And so I would call Hard Rock, my point of contact, and I would say, okay, what is what is the cost to do a buyout on this date? Okay, let's say April 10th, 2026. Well, they're gonna go back and look at April 10th of 2025 and figure out how much money they brought in on April 10th of 2025. Because of course, you don't want to go backwards, right? You always want to earn more money than you did the year before. So if they brought in $20,000 on April 10th, 2025, they're gonna call me back and say, David, yep, we can do it, but you need to spend a minimum of $22,000. Okay. Now, if I have a group of 200 people, $22,000 divided by 200 is only $110 per person. Okay. You say only, that seems like a lot. But if you think about ordering like 2 appetizers, maybe an entree, a dessert, and maybe a couple of drinks, you're right around that $100 mark, anyways. So, but if we look at that, that's basically what a buyout is. So, I knew a chef who did a buyout of his restaurant for a wedding reception, and the bride and groom paid $12,000 cash that night. Because at the end of the night, they just paid $12,000 cash to settle up the bill. And he did not go to the bank right away. He was exhausted. How many of y'all have worked like a long 8, 10, 12-hour shift? You're exhausted. He's like, I'll take care of that tomorrow. Well, guess what?
You got robbed,
He got robbed that night. And they took $12,000 cash.
probably.
So that's money that you're not going to get back. And so it's really important when we're talking about this revenue remember that's the top line of our P&L. That's the top line that everything gets subtracted from. And so if we lose any of that revenue, that just means our profit, our bottom line is going to suffer.
When I worked at Doe, on my way home, I would just stop at the Credit Human ATM and just deposit the cash that I got
Yeah,
immediately.
absolutely. All right, so let me stop the recording here.